In this last video, we're going to go over our closing process and closing entries, which I'll be showing in red. So our abbreviation to remember closing entries is REID. We're going to close all revenues, all expenses, income summary, and dividends. So at this point in time, you would go through and look through your ledger, and anything that is a revenue or an expense is going to be moved to this temporary account called income summary. And this is just where we pile up all of our revenues and expenses during the year. And then finally, we are going to move that to retained earnings. And then last, we're going to move dividends into retained earnings. So that's the process we're going to go over next. All right, so the first step in this process is to look for all of our revenue accounts. Any type of revenue, that's what we're going to close. So here we have one revenue account at this company called commissions revenue. And you can see that right now it has a balance of $9,750, and these have all been credits. And so we're going to need to put a debit here of $9,750 on April 30th. It's always the last day of the month, to close that account down to zero. So that's our very first journal entry we will put into our system. All right, so our very first journal entry is closing our revenues. So here our account was called commission revenue. And it had a balance of $9,750. We're going to be debiting that to close it down to zero. And when we move this, it's going to an account called income summary. It's a temporary account that just opens right at the end of the month. We shove all of our revenues and expenses in there. So income summary will be increasing with a credit. In our next journal entry, we're going to be looking for all of our expense accounts. Every single expense account our company would have, and close those down. So let's go back to our ledger accounts. All right, in this next journal entry, we're going to look at all of our expense accounts. So you might have 3, you might have 5, you might have 10, but our goal in this journal entry is to close every single expense account down to zero. So right now, if you look, for example, at our insurance expense, it has $133 as a debit, and our goal is to close this down to zero. So every expense account will get a credit in it for whatever its balance is to bring that account down to zero at the end of the month. Okay, so again, every single account that has an expense will be credited for that amount to bring our balance down to zero. And we're going to do every single expense item that we might have. And in this case, our problem has 4. It has insurance expense, office supplies expense, salaries expense, and then up here on a separate page, we have depreciation expense. So we're going to be closing all 4 expense accounts down to zero again by crediting them. All right, so our next journal entry is again closing down all of our expenses. Our expenses typically go in as debits to be increased. Now we're decreasing them down to zero, so we're going to be crediting everything that's an expense. So my first line here, I'm going to put as income summary. This is where all of my expenses will go, and I'm just going to enter this one line as a placeholder for the total of all my expenses in just a minute. Now I'm going to go through and list all of my expenses that I have, and you're going to have quite a lot of lines here. So for example, depreciation expense, and then every expense that follows: salaries expense, insurance expense, and office supplies expense. We're going to list them all individually as credits, and then the total amount, that's the sum of all these journal entries, will be entered in our debit. So that's a sum of $3,053, and this should also match what our total expenses were on the income statement you might have already created. All right, so now I'm going to go back over to my ledger, and I'm going to make sure that in my ledger or T accounts that all of my expenses and all of my income have been zeroed out. All right, so I've entered all my journal entries into my expense accounts, and all of the balances are now zeros. Okay, that's what I did in that previous journal entry, but I did forget to come over here and post the impact of these into my income summary account. So my first journal entry had revenues going in. My total revenue was $9,750 coming in to that account. And then my second journal entry that we worked on just now is a total of all my expenses. And that's entered just on one line. And the journal entry we just did, it's going on the debit side. And then my balance in here will be equal to my net income of $6,997, because this is my total revenues, and here are my expenses, and this will be my income. Now, in my next journal entry, I'm going to take this balance and income summary and close that down as well. And this balance is always going to be transferred out to zero and goes to our company's retained earnings. And if you think about it, this is what happens on our financial statement too. Our retained earnings moves over to our balance sheet. And that's what we're doing, is moving our net income to retained earnings, which will eventually go to our balance sheet as well. So here I'm going to be crediting $6,697 from my income summary, moving it over to my company's retained earnings through a journal entry. So this is again April 30th, and I'm moving it into retained earnings, and it's coming in here with a credit, $6,997. All right, and that's what I need to do in this third journal entry. Move everything out of income summary to retained earnings with a journal entry. All right, so in my last journal entry, I'm closing down income summary to zero. And to do that, in this situation, I need a debit to income summary, and the account receiving it is our company's retained earnings. And retained earnings is a credit account, it's an equity account, and it's going up with a credit. So $6,697. That is, again, my company's retained earnings increasing. All right, to recap, we have closed our revenues, our expenses, our income summary, and now we're going to go back and we're going to close our dividends. Right, so remember we said at the beginning that our acronym was REID. We'll always do our 4 journal entries in this exact same order. All right, so our very last journal entry here is to close out our balance in our dividend account. And to do that, we currently have a debit. We're going to place a credit in this account on April 30th to bring that down to zero, and it transfers into our company's retained earnings. That's where we pay all of our dividends out of. So it's going to appear right here on the bottom line, and it will pop in here as a debit, bringing this overall balance down. All right, so we're entering this very last journal entry in for our closing process, and we're closing down dividends, which is going to be our credit line, and we're taking that out of retained earnings. Retained earnings increased earlier with a credit, but here it's decreasing with a debit. And the amount, $1,500, to close that account down to zero. All right, entering that last journal entry here into retained earnings from dividends brings that final balance down to $5,197. All right, now to wrap up, I have zeros in all my revenue accounts. I have zeros in all of my expense accounts. I have zero balance in my dividend account, and my retained earnings balance has been updated and will match my retained earnings statement. And this is my new balance that will be found on my company's balance sheet. My final thing that I need to do is a post-close trial balance, just to make sure that all of our changes went through okay. And so we take all of the balances in our remaining accounts and we create one final trial balance as a double check. All right, so I've listed out every single item from my ending ledger, and then finally I've got my updated and ending retained earnings balance. This is finally updated from my closing entries, $5,197. My last thing that I'm going to do is total up both columns to make sure that both are equal. And if I total my credits, I should get 56,117, and I should get the same total again, 56,117. If both of these numbers match, hopefully I've got everything correct and my accounting cycle is 100% complete. Now, moving forward, if my company is continuing on, these will be my new opening balances for the next month or the coming year.